Welcome to the Deep Dive. Today we're doing something a bit different. We're diving deep into the pages of Addis Fortune, Ethiopia's leading English weekly. Think of us as your guides, really sifting through the most important economic and social stories shaping Ethiopia right now. And what we're seeing is this fascinating mix. Grand national ambitions clashing with some very tough daily realities for people and businesses. Ready to unpack this?
Absolutely. And what really jumps out from Addis Fortune's reporting is just how complex Ethiopia's situation is. You've got these huge reforms, these big ambitious projects launching, but, and this is crucial, they're happening against a backdrop of really persistent immediate pressures on everyday life. So this deep dive, I think, will really get into that tension, the gap between the announcements and the lived experience.
Yeah, that tension is almost tangible when you read through the paper. And you see these big national wins first, right? Things that definitely boost national pride, like the Great Ethiopian Renaissance Dam, GERD. 6 years late, sure, but now set to generate over 5,000 megawatts and potentially earn, over $1 billion a year in electricity exports. It's being called an emblem of collective achievement.
It is a huge symbol.
And then there's the other big one, the Ethiopian Securities Exchange, the ESX, finally launched after half a century. That signals a completely new era for capital markets there.
These are definitely momentous milestones, no question, symbols of progress, ambition. But, the paper's analysis quickly brings things back down to earth. It says, for millions of Ethiopians, these euphoric ribbon cuttings and bell-ringing ceremonies cannot disguise the mounting pressures on ordinary households.
Yeah.
The reality for most people is just a daily grind. And it's often shaped by what Addis Fortune calls brutal policy recommendations by international policy wonks.
Brutal policy recommendations.
Yeah. And it really highlights this classic development challenge, doesn't it?
Wow.
How do you manage these tough, maybe necessary reforms without causing so much immediate pain that you actually derail the long-term goals?
It paints a stark picture, and the paper really digs into the numbers that show that struggle. Inflation, for instance. Okay, it's cooled slightly, but it's still hovering near 20% year on year. That's high.
Very high.
And real wages, especially against the dollar, they're just not keeping up. They're shrinking, basically. Plus, you've got new taxes hitting almost everyone. And the plan to remove fuel subsidies, that's going to squeeze households even more. Last year, the birr's depreciation drove up food and fuel prices directly. It's a tough cycle.
And that fragility, it extends right into the financial sector, too, which is worrying. The central bank warned about liquidity. Their stress test showed that if just the top 10 depositors pulled their money, a staggering 20 out of 29 banks would fail to meet liquidity requirements.
20 out of 29, that seems like a major vulnerability.
It is. It points to potential systemic risk. And alongside that, we're seeing fraud, insider abuse that cost banks over 1.3 billion birr last year. Digital banking is growing, which is good, but it brings new risks too. So now regulators are telling the smaller banks they need to raise their capital to 5 billion birr by June 2026. That's a huge jump. It could definitely force some mergers or consolidation in the sector.
Okay, so you've got these intense economic pressures. But Addis Fortune also points out the political situation adds, another layer of uncertainty. The Pretoria Peace Accord seems to be fraying. You got TPLF factions arguing, and ongoing insurgencies in Amhara and Oromia regions. Plus, national elections are coming up. If promises aren't met, public faith could really erode further.
And there's the regional picture. Ethiopia's ambitions there are causing friction. Prime Minister Abiy Ahmed calling Red Sea access existential, saying he'll correct the mistake of landlocked status. Well, that's understandably caused some ripples, to say the least.
Ripples is putting it mildly, I imagine.
Right. You see Eritrea welcoming Egyptian and Saudi investment in Assab. And Somalia was clearly provoked by the deal Abiy made with the former Somaliland president for a leased naval base, especially with al-Shabaab violence flaring up again. It's a tense neighborhood.
Okay, let's circle back to the economy for a second. July 2024, the big foreign exchange liberalization. The birr was meant to float, right? But it ended up being more of a managed depreciation.
Exactly. The central bank sort of guided it down rather than a true free float. And the result, you still have this stubborn gap between the official rate and the parallel black market rate.
And the ESX, the stock exchange, it's trading now with banks like CBZ and Wigan listing?
Yes, but the paper stresses it's still pretty shallow. Not many listings, thin liquidity. Trading isn't very active yet. Even the big Ethio Telecom partial privatization, they hoped for 30 billion birr from a retail IPO. They only raised 3.2 billion. Now they're shifting focus to institutional investors, diaspora money.
Right.
So the overall outlook from Addis Fortune. The burr probably loses more value. Inflation stays high, maybe 13 to 18%, double digits. ESX liquidity stays tight. Probably more bank mergers coming. But ultimately, for most people, the paper argues it's the cost of living and jobs. Those are the main worries. And the real test, Addis Fortune says, is whether these reforms actually lead to real everyday improvements for people. It really comes down to balancing those big plans with immediate needs.
That's such a critical point. Okay, so we've seen the macro pressures. Let's zoom in now on how specific changes are hitting businesses and people directly. Starting with this, major tax overhaul reported in Addis Fortune, an abrupt tax reform, they call it, suspending the old turnover tax, the TOT, and replacing it with a much broader value-added tax, VAT, regime. And this isn't just some technical tweak, is it? It's causing chaos.
Yeah, chaos isn't too strong a word. Widespread confusion, fierce backlash. Now, the government's justification, according to Bill A. Weldu, the tax policy director quoted in the paper, is that they need to expand the tax base. The tax-to-GDP ratio fell to just 6.3%. That's low. Muley said, there is no overtaxation. It's all about expanding the base.
Yeah.
The target is ambitious, collecting 1.2 trillion burr this year.
Wow. But the backlash from businesses, tax pros, industry groups, it's intense. So the new rule, any business, incorporated or not, making over 2 million burr a year has to register for VAT. That includes the big Category A taxpayers, but also individuals offering professional services. But the really crazy part seems to be the timeline. Only 30 days to comply.
Exactly. 30 days. And the immediate impact was, well, predictable. Liquidity got squeezed instantly. Huge regulatory uncertainty. And a massive operational headache. VAT-registered businesses suddenly couldn't deduct expenses if they bought from a non-VAT supplier unless they had a proper VAT receipt. But as Aiklum Kabedi from the Addis Chamber pointed out, often those receipts just get discarded at the Revenue Bureau.
So you're penalized for buying from smaller suppliers who aren't VAT registered.
Effectively, yes, which hits supply chains hard because many suppliers are smaller, non-VAT businesses. There was a forum hosted by the Addis Chamber where people just unloaded on the lack of a transition period. Yurgu Tamri, chair of the Accountants and Auditors Association, EPAA, put it bluntly, you cannot simply fail to include a transition period. It just created an operational nightmare overnight. Shows a real disconnect, maybe, between policy design and ground reality.
And it sounds like the complaints go beyond just the VAT switch. Businesses are talking about long delays in customs, unclear procedures, tax auditors overreaching their authority, and this lack of due process, like having to deposit 50% of a disputed tax bill before you can even appeal it.
Mm-hmm. That puts a huge financial burden on challenging assessments, especially for smaller firms.
And then there's this weird alphabetical tax collection schedule in Addis Ababa. Yurgu Tamri called it a blatant violation of taxpayer rights. A businessman in Mercado, Abdul Hussein, said it just chokes working capital. Paying in tighter intervals means losing essential liquidity.
Yeah, and research by the Addis Chamber and the American Chamber here really paints this picture of systemic dysfunction. Unpredictable policy changes, overlapping rules, not enough talking to stakeholders, arbitrary enforcement. And expert Hanak Asifa is quoted criticizing the rollout for lacking both timing and tact. He questioned the legal basis for some directives, noting the main VAT directive was still being passed around informally while businesses were expected to comply. It just underscores how important a careful, phased approach is, especially with changes that hit businesses' bottom lines so directly.
Okay, shifting from business struggles to something deeply personal. Addis Fortune covers this story about the dream of home ownership turning into a nightmare. A courtroom showdown, a class action lawsuit, 236 people against Key Housing Finance Solutions and Bunna Insurance. They're alleging losses of over 29 million burr. What happened here?
Well, it started as this really ambitious scheme by Key Housing Finance, run by Jerem Asefa. They promised 100,000 homes over 10 years for low and middle income folks. Through a group savings model, the Key Common Housing Fund, people signed 30-year contracts. They thought they had a path.
A secure path, but then the National Bank of Ethiopia, the NBE, stepped in.
Right. That was the critical moment. The NBE ruled that the performance guarantee from Bunna Insurance that meant to protect members' money if Key Housing failed was not legally valid.
Mm-hmm.
So Bunna Insurance pulled it.
And the home buyers, the plaintiffs, what's their argument now?
Their core claim is that pulling the guarantee was a fundamental breach of contract. But they go further. They accuse Key Housing of running an illegal pyramid-style scheme and of acting outside its license by getting directly involved in real estate. And the evidence they point to is pretty stark. The few homes actually allocated are just incomplete shells stuck at the block wall stage. At the current rate of building, the lawsuit claims it would take over 30 years for everyone to get a home.
30 years. So what are they asking the court for?
They want the contracts formally ended, naturally. Full recovery of their 29 million birr, plus interest, plus damages for other losses, and they want both companies held jointly liable. They were also worried about assets disappearing, so they asked the court urgently to freeze 59 million birr in Key Housing's accounts and block the sale of a building they own.
Wow. It just really throws into sharp relief what happens when these financial safety nets fail, doesn't it? And when big promises run into, well, operational brick walls, ordinary people get hurt.
Exactly. And that theme of displacement, of development, having a sharp human cost, continues in the next story.
It does. This one's also from Addis Fortune. Really stark. Hundreds evicted overnight in Atina Terra. Shemiz Terra, this busy garment hub, nearly 500 households depending on it, cleared out. In the middle of the night, land fenced off. Small businesses just scattered.
The impact was immediate and, frankly, painful. Addis Fortune tells the story of a woman, nearly 65 years old, lost the advance payment she made for her stall. Now she's just sitting by the fence with clothes she can't sell, livelihood gone. And this isn't an isolated incident. It's part of this bigger wave of redevelopment in Addis. Corridor projects costing 33 billion birr an arm. But they've displaced tens of thousands, often moving them to condos on the city edge with poor services disconnected from their communities.
And these traders in Shemiz Terra, they weren't just random occupants, right? Many had roots going back decades to 1968. They'd even organized into share companies, Pirat Commercial Building, Becker Commercial Building. They'd raised nearly 150 million birr themselves to build their own G+9 building there. Getu Maruf, Pirat's manager, sounded completely bewildered in the article. How could they demolish the area in the middle of the night?
They claim they only got 3 days' notice. Not nearly enough time.
Well, city officials paint a different picture, of course. Fikratis Abena from the District Land Bureau told Addis Fortune that residents were notified. At a meeting back on June 9, 2025, apparently, with follow-up notices, and the city cabinet approved the land transfer in March. But here's a key sticking point. The city doesn't recognize those share companies the traders formed, and they claim many original tenants had illegally sublet their tiny stalls, like 1.5 to 2 square meters tiny. That legal technicality about subletting is becoming a major hurdle for people trying to get compensation.
So what happens to the land now? The 4,000 square meter plot, it's been handed over to a private company, Zangibo Textile Pills. They're planning a mall and apartments. Got a 60-year lease for 152 million birr. Officials were promising 25 square meter spaces in the new project for the displaced traders. But promises.
Promises versus reality again. What does the law say about this kind of displacement?
Hupta Mukasa, a land law lecturer quoted in the piece, explains the law usually requires at least a year's notice, unless there's an urgent public need. But he thinks that typically applies to things like roads, infrastructure, not necessarily commercial development. And as mentioned, he flags that challenge for traders who sublet without telling the city they risk losing compensation rights. It's just another powerful example of that tension. The city's drive to modernize versus protecting livelihoods and rights, especially for vulnerable groups.
Okay, let's shift gears one last time to the sovereign wealth fund Ethiopian Investment Holdings, EIH, led by Brooke Tai. Addis Fortune reports they're moving into uncharted terrain, taking an equity stake in Akobo Minerals, a Norwegian-listed gold miner operating in Ethiopia. And this is interesting because while it sounds strategic, the article raises big questions about Akobo's financial health.
Right. There's definitely symbolism here. EIH wants to unlock mineral wells, get foreign currency, diversify state investments. Dagmo Izelik from EIH Communications called it a turning point. Akobo moving into production after 15 years is a milestone. But then you look at the financials reported in Addis Fortune. Akobo's footing looks, well, precarious. A net loss of $17.4 million in 2024. Liabilities ballooned to almost $30 million against only $1 million in assets. They're deep in negative equity territory. Debts far outweigh assets.
It's a massive gap, and the paper points to debt as the main issue.
Very much so. They have $2.5 million in convertible loans debt. They can turn into shares with a really steep 20% interest rate. Ouch. Plus another $25 million in secured loans. So yes, loaded with expensive debt.
Right.
A London-based analyst, Abdoman Mohammed, is quoted saying basically, unless lenders agree to convert their credits into equity, Akobo's assets alone cannot cover its liabilities. End quote. Just the interest payments cost them $14 million. Shows how strained things are. And EIH's stake. It's small, under 1.9%, so not much direct influence.
But there is potential upside, isn't there? The central mine is producing some gold now.
It is. 5 to 10 kilograms a month currently, inaugurated by the PM, big ceremony. And EIH's investment is meant to help fund a new vertical shaft. That could boost output significantly, maybe to 50 kilograms a month by early 2026. That could potentially pull the company back from the brink. And they have identified gold reserves, about 69,000 ounces, worth maybe $230 million at current prices.
It's just a gamble.
Exactly. Analyst McBib Tesfaye calls it a high-risk and high-reward play. Akobo faces dilution risk from that convertible debt. He warns that unless they restructure debt, find more reserves, and really ramp up production, the investment is pretty speculative. What's fascinating, though, is seeing EIH make this kind of bet, because overall, EIH's other holdings are doing really well. They reported huge revenues, huge profits, 2.05 trillion birr revenue, 262.7 billion profit before tax, mostly thanks to Ethiopian Airlines, which brings in like 2/3 of their profits. So it's this small, risky mining venture set against a backdrop of huge, successful state enterprises. A strategic diversification gamble.
So bringing all these threads together from Addis Fortune, what's the big takeaway? It feels like Ethiopia is caught in this powerful current, right? Soaring ambitions, the dam, the stock market, these strategic investments, but also these persistent, really harsh realities on the ground. Inflation, tax shocks, housing problems, evictions.
That's precisely it. And the true test, as Addis Fortune consistently implies, is whether these big reforms, these grand plans, actually translate into real, tangible improvements in people's everyday lives. It really underscores the need for, measured governance, not just grand declarations of intent.
Yeah.
Translating that national vision into positive local impact that remains the core challenge, visible week after week in the paper's reporting.
That is the core tension. So the question for you listening is this. As Ethiopia pushes for rapid development, pushes for its place on the regional stage, how does it make sure those grand aspirations don't just steamroll the immediate needs, the well-being of its ordinary citizens? Which of these stories we've touched on today, the economic struggles, the tax battles, the housing hopes dashed, the evictions, the mining gamble, which ones will ultimately define Ethiopia's path forward? Something to think about. Thanks for joining us on this deep dive into the compelling stories from Addis Fortune. Stay curious and join us again next time.